you have some contrarian views here on markets and on the economy. And to quickly kind of introduce them, I'll say that there has been some talk now resurfacing about a Fed pivot, or at least this idea that the Fed will not be able to raise interest rates very much longer, that there's too much pressure from the markets and also from the bond markets. But you're not buying that.
Most people seem to think that, the Fed will not raise rates to break, the markets, or there may be some kind of a pivot, or what was before a Fed put. This all comes from the fact that we've seen this play out before, right? So in 2017, 2018, 2019, when, the Fed started raising rates, they had to stop at some point and they had to reverse course. At this stage, I don't think that's what's going to happen. But the thing is, the state of the economy right now is not what it was in 2018 or 2019. But the simple fact that at that point, inflation was really, really low. And inflation is a bigger killer than most other issues in the economy. It's worse than raising rates. It's worse.
Yeah.
So he has no choice, or they have no choice. They have to raise rates and they have to tighten. I'm not sure if you listened in on some of the conference calls this quarter from the retailers and various other companies reporting. But one of the things that most of the companies have been saying is the rate of change of inflation. So everybody was poised for inflation with, the supply chain issues and, the general level of price increases. I mean, this is something that people probably expected to a certain extent. But what was unexpected was the rate at which inflation increased. It was so fast in such a short period of time. And this is what is killing most of the companies in terms of margins, in terms of wages, in terms of cost. And the Fed knows this, and they have to get it under control.
Yeah. What do you make of the argument that inflation has peaked? Because if you look at the CPI and the PCE, the Fed's preferred gauge, both of these have kind of, it's not by much, but they have kind of crested, right? And second of all, you have the low base effects, right? If you look at a year over year, back in 2021, early 2021, we didn't have much inflation at all. So the year over year was going to be huge. But now as we move on into 2022, the year over year comp just isn't that, it's much higher. So the difference isn't as big. So you have the base effect rolling in. What do you make of all that argument?
So the thing is, yes, we did see the numbers come down ever so slightly. And perhaps it has peaked, but how fast will it go down? This is something that we need to consider. The amount of liquidity that was in the system, if you try to rein it in at the same speed, we might not get the same effect, right? So the way inflation went up, it might not come down at the same speed. And I don't think the Fed will stop until they see inflation somewhere around the 2.5%, maybe 3% level.